Welcome back to Sudden Wealth. I hope you're having a very nice evening. Before I start, I'd like to mention, if you like my content, please consider liking and subscribing. It helps greatly our channel. And I would like to start by saying, what about that crypto, huh? We've seen Bitcoin going above 30K, almost to 31K. We did satisfy the first target of 24K. 22K is about 50%. The longer we stay above, particularly 27 and a half, the better, and the less likely we're going to retest the 22K. I would like to mention that besides being in the recovery year of the cycle, so as I mentioned before, you have the bear market 2022, 2018, the recovery year 2019, 2023, and then the Bitcoin halving and start of the bull market 2024, 2020, and the full-fledged euphoria bull market 2021, 2025. Now, within this cycle, and by the way, one of the before I move on to the other part, one of the good ways you can test if we are indeed in the recovery year, you see this SEC crackdown and all these regulation fears. In the bear market year, like last year, this would have thrown us down hard, and it would have taken months and months to get out of it. Look at it now, less than a month, and the SEC dump is finished. We are back to where we were about a month ago. That's a sign of the recovery year. Now, in the bull market, you can throw whatever rumors or whatever news or whatever actions to the market, and it seems to go up no matter the news and what's happening. Now, within the market, we are a bit in the stage of the Bitcoin dominance cycle. So when we start to go up for the next leg up, it's still unclear if we're going to see 22K or not. As I mentioned, the longer we stay above these levels, the less likely. But we should start moving into the next stage, which is Bitcoin between $35,000 and $43,000. Now, typically in the recovery years, Bitcoin moves first, and then Ethereum, and then the altcoins. Question is why? Is there an evil mastermind behind everything pulling the strings? No. It's actually linked to liquidity bonding as well as the psychology of realized gains. So let's start with liquidity bonding. This is more prevalent in the case of Ethereum. Why? Because you have decentralized exchanges. What does that mean? So instead of the centralized exchange like, Binance, Coinbase, KuCoin, Kraken, etc., you actually have places like Uniswap in which the liquidity is provided by people like me and you. So we can create pairs of liquidity between, let's say, Ethereum and the ERC20 tokens. So those are the tokens on the Ethereum network, which are more than 10,000, by the way. And their liquidity is linked to Ethereum, which means that when Ethereum goes up, it pulls the price of all the other coins. Why? Because typically you have pools of liquidity between Ethereum and the other tokens, which means because you can trade one for the other, so when it goes up, the other one is pulled up as well. And by the way, when it goes down, it's the same thing. So if you will, altcoins end up being leverage on Ethereum. Free leverage, of course, in the sense that you don't get liquidated. Now, the number two is you see a huge run on Bitcoin, and a lot of people start thinking, okay, we just went up, 30% on Bitcoin. How much can we really go? So maybe I move something to Ethereum. Okay, but Ethereum also went up 40%. So how much can it go? So on and so forth. And then you draw down to the rest of the altcoin. That's why you have the Bitcoin season, which I believe we are in now. And then you have the Ethereum and altcoin season as well. In any case, this is a perfect example what's happening with what I mean by the recovery year. In the bear market, this SEC matter, it would have thrown us 50-60% down. In this case, less than a month, and it's already absorbed completely the impact of the SEC extravaganza, let's call it. So, I mean, all in all, we keep having good news. I think in the future I will speak a little bit more about my holdings. As you know, one of my lottery ticket plays still a hand. Nothing has changed. It's just funny, by the way, if you go to that Telegram, how people are so enthusiastic about killing their own bags. It's so funny. Yeah, but you can tell that they've placed way too much money on a meme project at the end of the day, and there's a lot of nervousness and people freaking out. So it's a good. Hopefully, people that are experiencing those feelings in that group will learn for the future. Have your own very important core retirement bags, and then a little bit for lottery play, a little bit for gambling, and if you lose, you lose. It's not a big deal, but you sleep well at night. So see you in the next one, and hope you have a very nice evening.